kick things off. And thank you all. I got some results here. Got some students and some parents on. Some folks looking to purchase, which is awesome. And a couple homeowners. Cool. So to give you an idea of what we will be covering today. So first of all, my name is Matt Kahn. That is me on the right in my Ferrari from 1984. I'm the Vice President of Corporate Accounts at Guaranteed Rates, and that's my contact information below there. So email address and my phone number. So feel free to give me a call, shoot me an email anytime. That goes right to my cell phone as well. So anytime you have questions or anything on mortgage related, or what do I think of Tom Selleck, just give me a call. I'm more than happy to discuss. So tonight, what we're going to go over, just a brief introduction on who Guaranteed Rate is, who we are. Go over the current market, which I'm sure you've heard a lot about in the news recently. We'll go through a first-time home buying, what that looks like. And then with that, like what types of loans are available and different options, and then get into what steps are involved with the refinance. And then we'll talk about the discounts that you have. And then at the end, we will go through any questions that you might have, and I'll try my best to answer them. I'm not a licensed mortgage specialist, so if it's something too specific, I won't be able to answer that, but I've been in the mortgage industry for over 10 years, so I do know quite a bit, and probably won't get stumped. I usually don't get stumped, but sometimes I do. So let's get into it. So Guaranteed Rate. So we are been around for just 22 years. So in the terms of the financial space, relatively new. But we are the third largest mortgage lender in the country, which is pretty amazing considering some of the other lenders have been around for hundreds of years, 100+ years. We currently have 10,000 employees across the United States, our own title company, Ravenswood Title, and our own insurance company, Guaranteed Rate Insurance. And if you are familiar with the Chicago White Sox or native to the Chicago area, the Chicago White Sox play at Guaranteed Rate Field. So you can see that there on your right. So we have quite the presence in Chicago, as our national name and brand has really grown over these last several years. We had a Super Bowl commercial last year, which was huge. So very pleased with where we're at, and we continue to grow, and just want to say thank you for partnerships like yours, because that's helping us achieve these goals. So the market, we've probably heard a little bit about the Fed raising rates, inflation. A lot of those things have been kind of hot topic right now. So this is the most current. This is from the 31st. So just a few days ago, we kind of a snapshot of where interest rates are. And you can see we're just over 4.5%. Definitely up from our pandemic level of like 2.5% a few months back, year and a half or so ago. But overall, even though like we've seen this increase recently, historically we're still extremely low. So we're at 4.5%, but some folks remember buying their first home at like 16%, not that long ago either. So this chart here is a 10-year chart that we're looking at. So you can see where it goes, kind of ebbs and flows around that 3 to 5%. So we're right in range right now. The Fed has said that they plan on raising rates more this year. So I would recommend anybody that is looking or have been kind of deciding whether or not they should refinance, I would do it sooner than later, just from everything that the Fed has been saying on interest rates. So still a great time, as I mentioned, but not as good as it was, but we're still in a good spot. So nothing to worry about there. So if you are a first-time home buyer out there and you have no idea what to expect if you start the process, I'm just going to kind of go through what those look like, kind of simplified. So the first thing you do is reach out to us, and I'll give you that contact information here in a bit. What we do is we do a quick mortgage review, which is basically we're going to pull your credit, we're going to go through like your savings, we're going to go through your debt, and then other expenses that you have, just to get a kind of an overall financial picture of what you have going on. Then we'll determine what the purchase price of the home is, and then what down payment you can afford. So loan options, which I'll get into in a few slides here, but as low as 3% down. So 3% of the purchase price would be what your down payment would be. We would then generate you a pre-approval letter for you to give to your real estate agent for them to put in an offer for. Once you have that home, you put your offer in, you would have an inspection as well as an appraisal. And then the final step there is the fun part, and that's when you go to the closing table and you get your keys and you sign all your papers. So relatively simple, but there is more in depth, and there's a little bit more as far as like what loan options you have and to kind of understand what those look like. So I'll get into those. Oh, also too, if there's any questions, we do have a Q&A box that you can go ahead and drop them in the Q&A window throughout the presentation, and I'll get to all of them at the end too, okay? So if you are on the fence deciding, like, let's say you're renting right now and you're trying to decide if it's a good time to purchase a home, this is a nice little chart we've created here just to give you an idea of what you're paying in rent would equal to what you would pay with a mortgage. So I always take the middle home here. So if your monthly rent currently is $1,600, that would translate to purchasing a home and having a $1,600 monthly mortgage payment, and that home value would be $265,200. So just to give you an idea of how that translates, same there. If you're paying $2,000 a month in rent, that'd be the equivalent of making a house payment for a $335,000 home. So, you know, some of the benefits, if you are, I mean, each time you make your mortgage payment, you're building equity within your home. It's a fixed expense. You know, a lot of folks have to deal with, depending on where you're at, rent increases every year or every other year whenever your lease is up. So you don't have to worry about that with a mortgage. It's consistent. You also have the ability to make the property your own. You know, you can tear down walls, paint walls, do whatever. I mean, it's your home. It's yours to do what you want. There's also potential tax benefits. And if you're, you know, if you're starting a family or just want to put your roots down in a community, you know, owning a home really does that, really cements that there. You know that your kids are going to be going to that school for however long you decide to stay in your home. So definitely puts you in control of where you're going to be at. So a lot of great benefits there. So when you do decide to purchase that home and start the process, what is the qualifications? So first thing is the credit score. So we pull your credit, and it pulls from the 3 bureaus, and they take the median of those, so the middle of all 3 of those numbers, and that's the score that's used to qualify. Then we look at what's your debt to income. So basically, how much on a monthly basis are you spending in bills versus how much are you earning? And then with that earning piece, with the income, we do a verification of employment. So that's twice in the process, once at the beginning and then once again right at the end before closing. We also ask for, if you're a W-2 employee, that your 2 most recent pay stubs. With all that, we determine like what the loan to value of the home is, and that's kind of the back end way of figuring out what your minimum down payment is on your home. And then again, as I kind of mentioned a few slides back, it's a pretty quick process. And you know, just because if you call us the first time, like, it doesn't mean you're starting the process. Don't get afraid if you just had some questions. Like, that's what we're here for. So don't feel like if you called us or went online with us that it's automatically starting the process. We're here to support and be a partner for you. So if it's just a question regarding like what would be, you know, could you take a look at my current mortgage, or what are rates at, anything like that, we definitely want to serve as a financial wellness partner and available for questions like that without feeling like you're starting any kind of sales process. So I always like to mention that. So now we're going to get into what are some of the different loan products and services, basically the loan options that we have available. So we have basically a fixed rate mortgage. That's kind of the standard. That's what most folks end up going with. There's also an adjustable rate mortgage, FHA, a VA, and a jumbo loan. So I'll go through each of those in a little bit greater detail. And again, any questions, feel free to throw those in the Q&A box and I'll get to them at the end. So the standard rate fixed, that is kind of how it sounds. It's a fixed rate mortgage. That means your interest rate is not changing. Depending on however long, you could have a fixed rate mortgage for 8 years or 30 years. We offer from 8 to 30. So whatever makes sense for your budget and what your goals are, you can choose those. If you're refinancing, that's what's one thing to note too. You don't have to refinance back into a 30 if you're a few years into your loan currently, then you had a 30-year. You could refinance and do 27. So you're not really losing those years that you've already been paying. So we have that flexibility to really pick your term. The standard fixed rate, it gives you the consistent and lowest payment. And we have the lowest you can put down is 3%. Ideally though, if you can, you want to put 20% down, because anything less than 20%, you're going to have to pay what's called private mortgage insurance. And it's an additional cost. It doesn't go towards your mortgage. It doesn't go towards paying your home off. It doesn't even go towards us. It goes towards the Fannie Freddie for like more of a third party insurance because you didn't have 20% down. The only way to get that off in most cases is to refinance. And then also with this loan here, the standard fixed, you have seller assistance up to 3% of the closing costs. So that gives you some negotiation room with the seller if you're purchasing a home to try to negotiate some cash back at the end of closing. So, you know, if you did have to bring a lot of money, if you work with them, they can give some back. So it gives you that flexibility, and that can change depending on the different loans that we offer. So I'll go through some more of those to see the difference. Adjustable rate mortgage, it's called the ARM on the streets. That's exactly what it is. It's an adjustable rate. So whatever term you decide that you want to go with, you can do a 5, 7, or a 10-year adjustable rate mortgage. So what that means, like if you chose the 7-year, your interest rate that you have today will be constant for 7 years from now. At that 7 years, it'll now adjust to what the current market is. But because of crazy times, in 7 years, if interest rates are 30% or something nuts, it won't go to 30%. There's caps put in place to make sure you have protection. Usually it's 1%. So if you did an adjustable rate today, and the one piece that makes an adjustable rate mortgage attractive is that there's a discount on. So you get a bit of a discount to use an adjustable rate over a fixed rate. So like you get a little discount on the rate, and then in 7 years it adjusts, and it could come down. That's the other great part too. So it could actually lower in 7 years, or it could go up, but you have caps in place to protect both sides. So the cap's usually 1%. So it could go up 1%, it could go down 1%. These are great. I've never had one, but a lot of folks that, maybe I'm just not a good planner, I don't know, but a lot of folks that do this, like, know, like, okay, I'm starting a family in a few years and I want to get into this school district. So they have, you know, that's another option. Like if you're really good at planning, you know exactly where you're going to be. This is a great way to take advantage of a discount on your interest rate. So if you know that you're going to move in 5 years, why not take the discount on the interest rate for the 5 years, and then you move and it doesn't matter anyways. Or if you foresee possibly a change in income, or you know, maybe you're graduating or anything like that. So some different options that people do that with. But it does give you a lower payment than if you just did a fixed rate. So, and it's still amortized over 30 years. So it's still amortized the same as if you did a 30-year fixed rate, but it's a 30-year adjustable, but adjusts in 5 or 7 or 10 years, if that makes sense. So not to get too much in the weeds on that, but again, any questions, just let me know. FHA loan, these are great loans. It's backed by the Federal Housing Administration. Great for first-time home buyers. This was actually the first loan that I ever had in my home. I needed some credit help when I first started out in the world, and my wife and I purchased a home on an FHA loan. It does allow you to have the lowest credit score and the highest seller assistance. You can get up to 6% back at closing from the seller. The standard fix is 3%, so you get quite a bit more with the FHA loan. The kicker on this one is that there's mortgage insurance for the life of the loan. So that I use this to get into the home. I didn't get approved for the standard fixed rate, so I did get approved for the FHA loan. I was in the home for a few years. I improved my credit and then refinanced into a standard fixed rate, actually, and shortened my term. So it kind of worked out nice for me. But it was great because exactly what the loan is for is to help people get into homes. So this is a minimum down payment of 3.5%. Again, the only downside to it is there is that additional expense of mortgage insurance. And like I said, it would have to be on there for the life of the loan. So VA loan, if there's any veterans on the call tonight, thank you for your service. There is no better option than a VA loan for you, active duty service members and your families. So this is issued by private lenders, but it's backed by the Department of Veteran Affairs. This is great as far as benefits go. There's no other loan that'll give you the benefits if you qualify for this loan. There's no down payment. It's easiest to qualify. And then you are able to have seller assistance up to 4% of the sales price of the home. So the key there is 0 down. Like that's pretty incredible. If you are, again, a veteran, active duty service member, your family, you can buy a home with 0 down. So that's the only loan like that. And that's just a way of thanks for the service. Thank you for your service again. So, and we are actually one of the largest VA lenders in the country. So talk to us. We'll make sure that you're in great hands. A jumbo loan. This is not an issue for me, but this is for high cost loans. So not every lender offers jumbo loans. We do. We're one of the trusted providers in the country of jumbo loans. And what jumbo loans is, it's just higher price loans. So some areas, when you talk about New York, California, or a lot of other areas, it seems like today, the loan amounts go up a certain threshold, and up to over, I have the numbers here, 548,000 and higher, you would need a jumbo loan. So if you're borrowing that much, that is a jumbo loan. And everything else is essentially the same as far as the it's a fixed, you can do a fixed rate, 30 years, or you can do an adjustable rate. So that portion of it, like the loan terms, are the same. The only thing is there's a little bit tighter credit guidelines and you need to put more down. But other than that, it's kind of the same. It's just all for larger loans, but not every lender does those. So just wanted to point those out. So quickly, refinancing. If you didn't take advantage of the refinancing boom over the last 2 years or so, when interest rates were dropped very low, it's still a good time to do it if you haven't done it in a few years, or if you've accumulated some debt. So the way I like to think of it too is, some folks have a lot of credit debt or other high interest debt, and sometimes credit debt's 26% interest. That's tough to pay off. This, if you think about this, you could do a cash out refinance, pay off some of those debts at 5% or less, right in that neighborhood, and have only one payment, which is your mortgage payment, and not have to deal with the high interest rate credit cards that you're only paying interest on anyway. So it is a good opportunity for that. Or if your interest rate's higher from a few years back, it's definitely worth taking a look at still. A lot of folks aren't, they're unaware of what their interest rates are. So it's always good to do like a checkup on that. So anything that investment wise, if you're savvy, a lot of folks are able to take cash out of their home with a cash out refinance to make investments, pay off debt, remodel a home. Anything you want to take cash out of your home for through a cash out refinance is yours to do it. There's no rules on what you have to do, and you don't have to pay that back. And it's a fixed rate. As far as, if that's what the loan type you go with is, if you refinance with a 30-year fixed loan, you get your cash out. You're paying a constant, 4.5%. So unlike some other like home equity lines of credit, those are actually variable. So this is in terms of planning, a little safer option. Okay, so I'm gonna get into some of the benefits that we have for you guys as partners. The first one's called G-Rate Realty Connect. So this is a real estate assistance program. So if you're buying or selling your home and you don't have a real estate agent, you can come to us and we can provide and introduce you to one through our program, through our Realty Advantage Connection. So this is 10,000 A+ agents across the country. So wherever you're at, you're covered. We have over 113 agents total. 3,000 offices, so we cover pretty much everywhere in the United States. And the advantage here is that depending on the price of the home, the sales price or the purchase price, you will receive cash back at closing. So there's the table on the right there. So if you sold your home for, I'll just say $300,000, you would receive $1,650 back at closing. So that's just a nice little bonus, extra perk. If maybe you don't know anybody in the real estate world, and we would introduce you to a top agent in your area. They're A+ agents. So not only are you getting a trusted agent, but you're also going to get cash back. There's only a few exclusions here. I don't know where everybody's at, but this program is non-Iowa, Alaska, Louisiana, or Oklahoma. And then there's a gift card issue with Tennessee and Kansas. But other than that, everything's pretty similar. Few just different state laws is why we have to account for those. But great program. Again, if you are looking to buy or sell, you're looking for more ways to really capitalize on the process, this is another opportunity for you to not only save, but to make a couple extra dollars at closing. So what we provide for you as well as partners is our Platinum Mortgage Program. So along with it, the G Realty Connect, we offer waived lender fees if you purchase or refinance with us. So that is a waived lender fee of $14.40. We also have discounted interest rates for you, which is huge right now because with rates going up right now, every little bit helps. But as I was trying to kind of mention earlier, we prefer to be a financial wellness partner. So we have a dedicated phone number, dedicated email, and dedicated landing page for you to go to. So again, you're not starting any sort of sales process with us. We're not going to call you 20 times a day. If you just want to, like I said, a complimentary mortgage review, if you're considering refinancing, you just want to see if it even makes sense, then just give us a call or whatever, or email us, whatever works best for you, depending on how quickly you want to talk with us, and we can do that. We have a dedicated team just for this partnership. Along with that, which was huge during the refinance boom last year, is priority loan processing. So there was a time where folks couldn't get the refi; they couldn't get a mortgage lender on the phone because of how busy everything got with interest rates dropping so quickly. That wasn't an issue with this channel, with this partnership, because we are able to provide priority loan processing, and as well as we have the best mortgage specialists in our company working with these partnerships like ours. We also have guaranteed rate insurance, which is available if you need a reference for insurance. So quite a few benefits for you. And let me go through on how to connect with us. So the phone number that directly goes to your dedicated team, it's 855-763-0906. The landing page, which is rate.com/NSHSS, or shoot us an email at nshss@rate.com. So those are the three ways if you start the process with us, to take advantage of any discounts. You have to go through one of those three kind of calls to action to contact us. So I feel like I threw a lot there at you. So I'm going to give you a minute if you want to write this information down, if you can see that, and then I'll also look for any questions that you guys might have, and I can get those answered for you. So I'll give you guys a minute, and then I'll go to the Q&A. Okay, I'm going to answer some of these live here. So it says, what's the best loan to get for first-time home buyers? So I would say a standard fixed rate. It's the least complicated as far as you're not dealing with an adjustable rate. The caveat here is that if you're a veteran, you always want to do a VA loan. Always look there first, because that will always be your best option. That is a perk and benefit that's only for you. And then I would go fixed standard rates, and then ultimately the FHA is kind of the third, because of that private mortgage insurance that is automatically on there. So that adds a little bit more cost. So as far as loans go, it's a little bit more expensive, but again, as I was mentioning, that's the loan it's there to help people. It's not necessarily the most affordable option. So I would say if you're able to qualify for just a standard fixed rate, I would go with just the standard fixed rate. And it's 620 credit score. You can qualify for that. And, a couple other criteria falls into what, ultimately your interest rates are based on your how much money you're putting down, and what your credit score is, and your debt to income level. So those all kind of roll into that, but that'll give you the best possible interest rate as well as costs. I am a homeschool student starting college. Will it be possible to get a certificate from you that I attended the seminar? Sure. I can definitely do that. Do you offer conventional loans? Yes, we offer conventional loans. 8 to 30 year conventional loans. So you can pick your term there. And yeah, pretty straightforward. Is there a certain age or time that someone should buy their first home? No. I mean, I think that's really just depends on where you're at in life. Um, Going back to that slide as far as renting versus owning, if you're somebody that you want to move around a lot and you don't really want to be tied down anywhere, then maybe it makes more sense for you to continue to rent. The downside, again, as I mentioned on that slide, is that you won't be building equity. So um, and equity is nice because at the end of the day, homes appreciate over periods of time. They always appreciate. They always go up, and so you're kind of missing out on that investment in your life. But if it doesn't make sense for you, it doesn't make sense for you. So I wouldn't say that there's a give and take. But a lot of folks they graduate and they get the job. The job's obviously an important piece of it to get qualified. And maybe then you start looking at settling down and you know where you want to live. So I definitely say it's person to person on that. But there's no like age limits as far as purchasing a home. All right, let's see. Perfect. And then Adriana, I will, if you want to do this, there's a question. I'm just going to go back to the beginning here. Adriana, if you want to just copy down my email address and then just shoot me over whatever you need, and I can get that made for you as far as any sort of certificate. See, somebody asked, can I use my credit score and my husband's income to qualify for a loan? Yes and no. You can both be on the loan, but as far as credit goes, it would be if you're on a loan with anybody else, whether it's a spouse or just a co-signer, the person with the lowest credit score is the credit score that's used. So the shared income, that's the perk. You take both your income and that's used to qualify. But then the other side of that is, of the two of you, the lesser of the credit score is used to determine your qualifications. So so it's good and bad. But we'll work with you on that. We're there to play around with scenarios to see what ultimately makes sense to get you the payment that's going to make sense for you. So sometimes we can look at other options and help you out that way too. Can you buy a second home when you have a mortgage already? Yes, absolutely. You can buy as long as you qualify. That's it. That's, as I mentioned, what that debt to income ratio is. So that your first home, you have a mortgage on there. So that mortgage payment is going to go into your debt column, and that's which is used to create your ratio. So that divided by your income is your ratio, and that needs to be around 50% for everything to work. Under 50% debt to income. So as long as that part works, you can have as many mortgages. Actually, I think there's a limit of like 8, but you can have quite a few mortgages. So it's not limited to one, because a lot of folks, they purchase properties and then they rent them out. So, and they'll have a mortgage on those, but the rent that they're charged goes into their income. So that's how their debt to income stays where they're able to get approved. Oh, these are great questions though. Somebody asks, do I need any purpose to take cash out of my home? So I think, which means you can use it for any reason. I think this is what, if I'm reading that correctly. So any reason that you want to take cash out, whether it's for, like I mentioned, like a remodel. When I actually refinanced back when I had my first loan, I mentioned I had an FHA loan, and a few years into that, I refinanced into a fixed rate. And I actually took a little bit of cash out when I did that as well. And I bought a car. I used car with that, and I paid cash, which was kind of nice. So you can use that for anything. That's the nice part, going back to like when is a good age as well to purchase a home. That is a nice thing to have, because I had equity that had built up in the home, because the home's prices, my home went up in value. So now I had some equity, and then I was able to use that equity to buy a car. And as far as for me, it made sense. So like those are opportunities that are nice that come up when you do have a home and you do have some equity in there, and when it turns into an asset. So what role does student loans play in buying one's first home? So the student loan would go on to the debt side. So if you have a mortgage payment, if you have a student loan payment that shows up on your credit report. So anything that shows up on your credit report and it shows a monthly payment for it, that is going to go into your debt column when we talk about comparing your debt to income. So yes, whatever your student loan, whatever your monthly payment is on that student loan, that's the amount that'll be used to determine your debt to income ratio. So again, just that process, we take that credit report, we add up, because your credit report shows you all the debts that you have that have and what that monthly payment is. So your car payment, if you, like you said, if you have another mortgage, if any credit cards, any secured loans, like if you had a boat loan or a student loan, that monthly payment amount all shows up on there, and we total that all up and then divide that by how much money you earn in a month, and that gives you that ratio. So anything that shows up on that report is going to be used. So if you're self-employed, what do I need to do if I'm self-employed? So it's a little bit different because W-2 earners just have to provide those pay stubs. You would need to provide a 1099, and I believe it's the last 2 years of tax returns. And that's how income is verified there. So some of that there are other ways to, there's investments that if you hold can be used to help you show more income. Some of those, there's a lot of little smaller opportunities that people have that aren't as significant, that aren't as regularly occurring for folks. So I usually don't mention those, but if somebody has a large amount of investments, there's a portion of that can be used as their income. So there are some kind of one-off kind of scenarios for folks that have some unique situations. But that's where I'm like, whoa, it's getting a little deep in here for me. So I would always urge, once it gets a little past some of the normal circumstances and scenarios, is just to reach out to one of our mortgage specialists, and they know everything in and out. My opinion on the price of the housing market now versus the future. I wish I knew that. I do know though, like what has been going on the last year or two has been, I'll say bananas a little bit. I'd say it's bananas as far as how quickly home prices have gone up. We've obviously living in really unique times with everything that we've gone through in the last 2 years. So everything's a little bit out of the norm. It seems like daily is still out of the norm, but we're still trying to settle back into what the norm is. So what we saw were home prices, because of the scarcity of homes on the market for sale, the prices of those homes being driven up quite quickly. So home prices have been going up, and you mix that with really low interest rates. That's another part that adds to the values of homes going up. Anytime interest rates are low, home prices go up. When interest rates start to go up, home prices will come back down. And the reason that happens is because as I go through and talk about that qualifications, it's off of that debt to income. It's really off of that monthly amount. So I don't want to lose you guys, but you can only afford so much a month, of a piece of pie. So depending on what interest rates are at, interest is a piece of the mortgage pie of what your payments made of, and then principal. So actually paying down the home and interest is what your house payment's made of. So interest rates go up, you can still only afford, $1,500 a month. So that means the principal is less. So that means you're actually purchasing less home. So I hope I didn't lose you guys there, but I would say that there would be the long way to answer this question. I think there's going to be a stabilizing of the home prices. I think if anything, they might come back down a little bit and just settle that. I mean, it would seem like they have to. They have to come back down a little bit here. But I don't know how much that is. That's the big question. Like how high have prices gone over what they should be at? And, I think time's going to tell, but I mean, obviously we've experienced some inflation. So home values are going to stay up to some level, but it's just understanding like, what is that level? But I mean, if you're planning for the long term, I always recommend too, because there is a lot of wonkiness going on with making offers, people paying way over or waiving inspections. And I would just always advise against that. Like, don't get yourself into debt down the road or into trouble down the road because you didn't do a home inspection because you wanted to make your offer better. Still make sure you're covering yourself. You're taking care of the home that you're about to buy. So get the inspection. Like that to me is crazy. Like, this is a huge investment. You want to make sure that you know what you're getting for it, and not to fall prey to kind of the craze of getting the offer accepted. So yeah, I would just make sure you're doing your due diligence when you're purchasing a home and not getting kind of carried away in some of this going on right now. So I will put this back up. I'll give you guys another shot here at if you want to write down my phone number or my email address. So if you think of anything else, don't hesitate to give me a call. Don't hesitate to shoot me an email. And this is Tom Selleck right there. And then on the other side here, if you are interested and you wanted to just have us either take a look at your current mortgage situation, if you're looking to possibly refinance, or if you're interested in seeing what you would qualify for, if you want to jump into home purchase season spring starting. This is starting to be the biggest time of the year for home sales as kids start to finish up the school year. So that's the other part too, feeling pretty hopeful that more houses are going to be available on the market, which will kind of release some of that demand, that pent up demand that we're seeing right now. So hopefully that'll stabilize home prices a little bit too, and keep things affordable for everybody, and just make the process a little bit easier for folks, especially the folks that are trying to get into a home, so they can make good choices. Here's the number, the landing page, the web address, as well as the email. So really any opportunity for us to help you, please let us know. I'm available to answer any questions you have, and my mortgage specialist team is available again for more in-depth questions, and also just to give you more personalized answers and see what we can actually do for you if you're considering a loan. That's all I have. I haven't seen any more questions in. I'll give another last call for questions, and then I will send you guys off. Sure, I didn't miss any. Oh, I missed a couple questions. Okay, well, I missed one. All right. What's the best loan to get for the first-time home buyer? Conventional or FHA? So I would go conventional if your credit is good. If your credit score is high enough, definitely want to go convention. Really, the main difference of the two is the FHA allows for a little bit lower credit score. So that credit score is 580, where a conventional is 620. So there's about a 40-point difference there. And a few minor other differences. FHA is easier to qualify for. So depending on your situation, your debt to income level, as well as your credit score, are really the two main differences there. So FHA being a little easier to qualify for. However, you do have that mortgage insurance that you're going to have to pay on. So that's the downside to that. Where conventional, even if you don't put 20% down, you will have a mortgage insurance on there until you reach that 20%, and then it'll come off. So at least it comes off there without refinancing. But at FHA, you'd have to refinance. But the good news is you come back through us, we waive all the fees, and it's really not that big of a deal. It's pretty fast process. You know, I didn't get too much into our process, but you know, we can do this completely online. We close in 14 days or less. I mean, right in that area, especially for a refinance. Like we've seen 8-day refinances. So the process is seamless. It's very easy. It's not anything to be dreaded, and we're there to explain. We have a portal that you'll use too, so you always know exactly where you're at in the process. You can see if you need to add any documents or sign anything. So you always know where you're at, and we're always available as well. So we communicate through text, email, phone calls. We really do our best to be just available for you when you need us. Okay, I think that's it. I just want to thank you for your time tonight. Thank you for allowing us to be partnered with you. And please don't hesitate to reach out. We'd love the opportunity to work with you here, and especially save you some money if you're buying, selling, or refinancing this spring. Please reach out to us and we'll see what we can do. But thank you, everyone. I appreciate your time. Have a great night.
Thank you, everyone.